Hi, I'm Max Keiser. Welcome to the Keiser Report. Many people want to know what's going on at Mt.Gox, the Bitcoin exchange. I'll tell you what's wrong with Mt.Gox. Market making. We're going to talk about that right now. Stacy Herbert.
Max Keiser.
Yes.
For those out there who don't know, of course, Bitcoin is this new currency. It's a network protocol, an online exchange, a way to transfer value online. And 80% of Bitcoins are traded on Mt.Gox. Now, Mt.Gox stands for Magic the Gathering Online Exchange. It started life as a place where you could exchange Magic the Gathering cards for cash. And it ended up, not by design, obviously, but it became the place to go to trade Bitcoins as well. But William Bonsai has created a backstage look at what the Mt.Gox command node looks like. As you see, it looks very 1950s. Now, Max, you created the Hollywood Stock Exchange, where it's run by the virtual specialist technology, which you invented. And a few days before Mt.Gox crashed, you warned exactly of this. So explain what is wrong with the market-making function here.
The way trades are processed, the buyers and the sellers at Mt.Gox and all these other exchanges, it's not done in a way that's commensurate, let's say, with the way trades are cleared at an exchange like the New York Stock Exchange or some other exchange, where there is a specialist function who is making a market, and their job is to create a fair and orderly price, matching buys and sells. And so they do this by having both the ability to match trades, buyers and sellers, but also managing an inventory of whatever it is they're trading in. So if it's IBM stock on the floor of the New York Stock Exchange, the market maker would have an inventory of IBM stock so that if in fact there was a mismatch of buyers and sellers, they can step in and be the market maker. That doesn't exist on any of these exchanges, really. They're trying to match up buyers and sellers in a way that's completely inappropriate for any kind of modern market-making mechanism. And so I'm in the process now of trying to straighten that out by consulting with projects here in London and elsewhere to see if we can't bring in world-class market making. And of course, my patent on this, the virtual specialist, the designs of that patent, which go back to the 1990s, there's been a lot of improved ideas that have come along since then that I'm hoping to bring to the party.
What would Mt.Gox look like with a proper market-making function if it were actually matching buyers and sellers? Right now, they're hands-off. It just comes as the orders come in. It clears those orders, even if it's 0.0001 Bitcoin. It goes into the same queue as somebody trying to place an order for 1,000 Bitcoins.
Yeah, well, first of all, there's really only one security here, and that's Bitcoin.
Yeah.
But there's multiple exchanges trying to be exchanges, buyers and sellers of Bitcoin. So now you have different price discovery spread out over different exchanges, and they're all inadequate. So you have this incredible spread on different prices on different exchanges. So that's problem number one. The good news is that there's only one security here that you need to make a market in, but there needs to be at least one functioning market that's able to take buys and sells and create what it would look like. Mt.Gox, you'd be able to, for example, put in market orders for Bitcoin at a fair and orderly price that would be at or near what is a market for Bitcoin. Right now you have a lot of people putting in limit orders, but they want to buy and sell at a certain price, and these are lined up and they're trying to match these limit orders against each other. There is no real good way to buy and sell at the market or market orders, and if you don't have a market order, and this was the innovation I brought to the virtual specialist technology back in the 1990s, is how to create a market order on an exchange with a virtual security using a virtual currency, which was the basis then for Hollywood Stock Exchange. It was the basis for what became known as the prediction market industry, which pretty much is built on my technology. It's built on my concepts of what you can do with a virtual currency in a virtual market. And so you need to bring some of that over to this space to make a market. But as you point out, and as I've said all along, the mining of Bitcoins under Satoshi Nakamoto, that's the genesis creation of the Bitcoins. That's brilliant, and it's fantastic, and the blockchain itself of Bitcoin creation is unimpeachable, and there's nothing wrong with that. Then there's the wallet technology, which is to some degree being proven to be a little bit less than robust. Then there's the merchant side of the business. That seems to be doing the best. You know, people who are actually in the business of facilitating merchandising are doing quite well. But then the exchange piece of the Bitcoin ecosystem, as I've been saying now all along, is the weakest link in the chain, because you have people who are trying to adapt magic card trading systems for multi-billion-dollar exchange platforms, and they're not up to the task.
However, the success of Bitcoin itself, as Mt.Gox says, that they were signing up 80,000 new registrants in March, or 60,000, sorry, and now they're doing 20,000 new registrants a day. So it's a booming market, but CNBC, after this crash, did contact you, and it resulted in a headline, Bitcoin crash spurs race to create new exchanges. So there's a lot of former guys like you who were... You're still a guy, but guys who were formerly market makers or creators and exchanges. So whether it's, the rumor is Cantor Fitzgerald is coming up with an exchange. This is a rumor we have heard, exclusive here, that they're going to introduce your technology to the Bitcoin space. There's a new site called OpenCoin, which is trading Bitcoin, but also Ripple, another math-backed currency. And we talked about that here 2 years ago with David Hales. But the guy behind that is the guy behind the P2P lending facility, I think Prosper. So they're guys who have built big companies making markets and prices and price discovery, who know what they're doing, rather than this like gaming center here.
Yeah, I think for people to understand where we are on the chronological progression, the timeline of Bitcoin's acceptance and use as mainstream currency and challenge to fiat currencies, you have to understand that right now the technology of Bitcoin is what I would say pre-Netscape. If you remember, Netscape went public in the early 1990s, and before then there was no browser really that people were using on the internet. There was no way to just jump onto a browser and start surfing the web. It was done in a way that was extremely user unfriendly. Then you had Netscape, then Netscape went public, and then you had Google, and you had eBay, and you had this whole phenomenon known as the internet. But it's based on that browser technology. Right now there is no similar ease of use technology, and then people will be buying and selling Bitcoins and will not in any moment ever think about the blockchain or Satoshi or cryptology. That'll never cross their mind. They'll just be buying and selling Bitcoin. But so this is the mad dash to be taking advantage of what this is going to be a multi-hundred billion, multi-trillion-dollar market.
So the internet before Netscape was when Paul Krugman said, the internet is just a fad, it will never be bigger or more important to the economy than the fax machine. And looking at it then, that the ugly beast it was, that only Richard Stallman could figure out how to use it. By the way, when we've seen Richard Stallman use the internet, he doesn't use it like you do. But Paul Krugman has also weighed in on Bitcoin with similar opinion.
Right, well, you would expect that because these guys are they're indicators of a market in a way that you'd have to interpret their words as a good reason to do the exact opposite. So he's a guy he's on the payroll of an academic system and the New York Times to produce columns that give old blue-haired ladies a sense of comfort on their Park Avenue apartments. It has no relevancy to actual day-to-day workings of technology, the economy, currencies. He's a complete bimbo.
In the second half, we do talk to Tony Galippi of BitPay, who was here last Wednesday. He was in town from Atlanta. And so we did talk to him before the Mt.Gox crash. But, you know, on the merchant side, he's signing up merchants right, left, and center. For a merchant, which I've been on Pirate My Film, and I've also used PayPal, the ease of use is just dramatically different for a merchant. Anybody selling something, it's much easier. And there are those out there who are saying, well, you know, what can you do? Or it's, you know, you can't buy anything. But Amaji Metals, who we were, you know, when we were with Tony Galippi that night when Mt.Gox was crashing, he was saying that Amaji Metals, where you could use your Bitcoin and buy gold and silver, they had their record volume that day. People were trading their Bitcoin for gold and silver, immediate cash for cash.
Yeah, well, BitPay is an example of a service that's easy to use, and people are sticking that use Bitcoin and BitPay to merchandise for the merchants to use, and they are able to do it on my site, piratemyfilm.com. We've financed 20 films using Bitcoin and BitPay, so that's the only crowdfunding site out there that uses Bitcoin.
BitPay is processing $5 million a month, but again, it's still in the infancy, this whole new network protocol, this new virtual currency and peer-to-peer currency. And, I want to compare it to a story that was going on at the same exact time, the same day as Mt.Gox. ING again targeted in DDoS attack. ING bank customers were again unable to use online banking services on Tuesday night because of a renewed cyber attack. This was a week after they were left in chaos for a whole week because they were being attacked. But here's one bank in the Netherlands. The euro didn't crash. The economy didn't crash because, of course, there are other banks and other ways of getting cash.
The banks are suffering exactly the same problems as Bitcoin is suffering. The economies are suffering from the exact problems in that the dollar or the yen or the euro are being debased or fooled around with or confiscated by various governments. So I think that Bitcoin is a good proxy to understand how chaotic the global finance is. Just because Paul Krugman comes out with a column and says that there's nothing to worry about, and because the US dollar is manipulated and managed by the central banking system, even though that causing massive austerity and poverty around the world, doesn't mean that these currencies are not in a state of crises. Bitcoin is the proxy for how screwed up these other currencies are. You want to get a true price signal of how screwed up the global economy is, don't look at the dollar, don't look at the Dow Jones, look at Bitcoin. This is what's telling you how screwed up the rest of the world economy is.
And again, it is a network protocol, and as adoption of the technology spreads, you were talking about your days being in the internet space in 1994, is a lot different from what it is now. It was a lot more expensive and time-consuming then, but now it's much easier. I want to look at this chart. Consumption spreads faster today, and this is from the New York Times. And as you see, the telephone took from 1900 all the way to 1975 before it hit 90% of the population. Clothes dryer all the way over there on the left from 1920, it took up to 2000 to get to 80%. The automobile, stove all started there on the left, old technologies, but took a long time to get to 100%. And then as you see on the right, the wave gets closer and closer, jammed packed closer and closer as the internet, telephone, fax, VCR it looked like a bubble.
It goes back to my idea that I came up with 25 years ago about the lunar dollar, which would be a currency traded on the dark side of the moon that would be based in units of time and would allow you to buy and sell your way through time backwards and forwards. I mean, that's what I thought you could come up with. I think BitPay is an interesting staging platform to become into the lunar dollar protocol, which I'm working on now in my imagination.
You do know there's an Iranian scientist who says he's invented something that could take you 8 years in the future. Perhaps you should.
And I don't get credit. You see, I never get credit for these things. People just rip me off. It's terrible. Just give me credit. If you're going to rip me off, give me credit. All right, Stacy Herbert, thanks so much for being on the Keiser Report.
Thank you, Max.
Stay tuned for the second half. We'll be talking to Tony Galippi of BitPay.com. Welcome back to the Keiser Report. I'm Max Keiser. Time now to turn to Tony Galippi of BitPay. Tony, welcome to the Keiser Report.
Thanks, Max.
Nice to see you again. I haven't seen you since Prague.
I know.
And that was the beginning of the BitPay, Bitcoin kind of phenomenon a few years ago, and it was just really a crypto punk currency, but now it's mainstream news.
It's definitely come a long way.
Now, you're in the business, BitPay, so this is part of the business that's in the transactions side of the business. The Bitcoin ecosystem has a number of different, moving parts. You're in the transaction business. I guess one could say you're similar to PayPal in that sense, correct?
Somewhat. The merchant side of PayPal. We don't offer any consumer services, but what we do is we make it easy for businesses to accept Bitcoin as a form of payment.
I would imagine there's a lot of demand for it.
There is. There's a lot of pain out there today in businesses trying to collect payments, especially if you're trying to collect a payment over the internet and you're trying to sell a high-ticket item. It's very risky today. What Bitcoin allows a business to do is accept a payment over the internet from any country on the planet with nearly no risk of fraud. And no other payment processor and payment network can do that today. So the value proposition is there, but it works completely differently than PayPal and credit cards and everything else. So none of the existing software that businesses have will process Bitcoin. So that's why we got to work about 2 years ago in creating a new platform and a new interface that would allow businesses to accept Bitcoin as a form of payment.
Okay, so when somebody says Bitcoin is a bankless currency, is that true?
Well, you are storing your money in the cloud. Bitcoin is money in the cloud. And like everything else that's moving to the cloud, you can access it from any computer, anywhere in the world, at any time, and you can do whatever the heck you want with it. You know, Bitcoin is the only kind of money that you can do that with.
Okay, so the answer though is that it is without banks.
Well, you're
don't
putting,
need a bank.
yeah, you don't need a bank. You're trusting your peers. You're trusting the millions of people who are already using it.
For that reason, it's a bit of a controversy because people think that they need banks. They think they need currency backed by banks and a central bank with the name of a country on it. Sure. And this is a challenge to it. And they say, well, it's like P2P BitTorrents that challenge the music industry. This is really challenging the whole banking infrastructure. But I want to go back to kind of a philosophical question. You know, we've had chats before in the past, kind of the bigger philosophy of Bitcoin. But I think people, particularly writers like Felix Salmon of Reuters and others, they look at it, they're trying to evaluate it as a commodity, or they're trying to look at it in terms of just a currency, and they're trying to apply economic arguments to it. But I think everyone misses the point that the place you start with when you talk about Bitcoin is that it's something called a Bitcoin protocol. Mm-hmm. Which is a network protocol.
Yes.
And that's something everyone seems to be missing. Talk about it.
Sure. So the value of the network is that individual nodes can transact with each other without going through a central bank or a central clearing. That is the fundamental computer science innovation behind Bitcoin.
Okay, so for example, on the internet, you've got HTTP, you've got IP, you've got Ethernet. These are all network protocols.
Correct.
And so Satoshi Nakamoto, the pseudonymous founder, could be one guy, could be a group of guys, they took that concept of the network protocol and they applied it to currency.
To money, yeah. And it really, it's not a true currency, it's not a true commodity, it's almost a new asset class that is not defined by what we know today.
I think that's an important point because I know here in London we're building now on having consultations with funds that are looking at it as an asset class that they need exposure to, because the economy is fundamentally changing in a big way. So let's talk about the recent comments from FinCEN, which this is a regulatory body in the US. Mm-hmm. They have a ruling, which I guess the broad description of this ruling would be that Bitcoin would fall under roughly jurisdictional concerns relating to money laundering, et cetera. So anyway, the feds are involved. Yep. Is this good or bad? What do you think?
Well, it's good. First of all, it's just guidance. It's not a ruling, but it basically says that Bitcoins are money, which is something that we've been proposing for several years now, and which is good. So at least they have come along to agree with our argument. But you know what it says is that if you have a certain type of activity, like if you do remittance or payroll or some type of a money transfer activity, money transmission activity, the same rules should apply whether you use dollars or Bitcoin or anything else. Right, so the rules should be applied to Bitcoin, and Bitcoin is now considered money. But clearly it's starting to get on the radar, but it also shows that they don't quite understand it. You know, Bitcoins are in the cloud. It's an accounting ledger in the cloud, and you're not actually transporting anything. Even if I were to send you Bitcoins right now, I'm not sending you any type of a file or an attachment. I'm moving money from my account in the cloud to your account in the cloud. And that accounting ledger is stored on, you know, tens of thousands of computers around the world.
How many companies are in the periphery of this $2.5 billion Bitcoin valuation? You're in a company, you're in a startup, you're in BitPay, you're in Atlanta, Georgia, you're hiring people, you're part of the new economy. How many other startups are out there approximately?
I mean, there's dozens, and they're doing wallets, they're doing exchanges, they're doing merchant services, they're creating stores where people can spend their Bitcoins, right? Because now you have people who are early investors that are now Bitcoin millionaires. They don't really want to sell their Bitcoins. They want to start buying properties and cars and other items, you know, for their lifestyle. They want to just trade their Bitcoins for those items.
Right.
Yes.
The point is that they're not hoarding Bitcoin so much as they're looking for something to buy with Bitcoin. Show me something I want.
Yeah.
And they'll spend it.
Yeah. Show me a car. Show me.
But they have savings.
Yeah.
They have independence. They're economically free.
Absolutely.
They're rich.
And they can go anywhere in the world and access their money anytime and do whatever the heck they want with it.
What about, now there seems to be, you know, economically speaking, at first, of course, the Keynesians out there don't like it because they're into money printing and central planning. So, okay, forget them, they're not into it. Then you've got the, I would say, the libertarians and the so-called Austrian school. Mm-hmm. You know, they're more about honest money or true money or gold and silver as money.
Yep.
But within the Austrian school, there seems to be a split. You've got some within the school that are, Bitcoin fulfills Carl Menge's definition of money, and therefore it's Austrian and it's good. And then there are some people that are saying, no, it's not.
Yeah.
Okay, so you're smiling, so you're aware of this argument. Not to get too philosophical here, but throw some comments onto this brewing controversy, if you can.
Yeah, well, I think let's just take a simple example of somebody who's into gold. They see gold as a safe haven. It is the only true hard currency of the world, has been for thousands of years. That's very true. Gold is a last resort where all else will follow down to in the pyramid. But right now, it's not very easy to transport gold. Did you see the guy who had $1 million worth or millions of dollars worth in his car and got busted at the border in Italy?
But the key is intrinsic value.
So if he had used Bitcoin, he wouldn't have had that
We
problem.
understand that.
Yes.
So it has its portability, which is good. But on the, portability, fungibility, durability, that's all good. Where there seems to be a question is intrinsic value.
Yes.
People say, gold has intrinsic value, I can make jewelry out of it, I can see it. Bitcoin has no intrinsic value. I think that does, but you're the master of the Bitcoin world. Tell us.
Well, I think you have to look at what gives any type of money value. We started with gold, then we went to paper money. Paper money was more convenient to carry around and more convenient to make change.
But it's backed by gold.
It was backed by gold. And then we went to digital money, like digital dollars, right? Centrally issued digital currencies that are linked to gold and linked to paper dollars, at least initially, until we went off the gold standard. So everything was kind of linked to something else, right? Now our money is linked to debt. Bitcoin is now just pure information. And so what gives any type of money value is how useful is it as money. A gold coin is worth so much, but if you've got to pay somebody in Germany right now, that gold coin's not going to do you a lot of good. In that case, money in a bank account might be useful to you. Well, so what gives any type of money value, including Bitcoin, is its utility as money. What can you do with it? And now that you have a global network, an accounting ledger in the cloud, and peer-to-peer, that's what gives Bitcoin its value. It's the network, and it's what you can do with it.
Okay, it's useful, but getting back to this intrinsic value discussion and argument a little bit more, there is an intrinsic value to Bitcoin that has to do with its value as a cryptological expression of cryptology. Mm-hmm. That, in other words, the mining process, which is at the heart of creating these coins,
yep.
You're mining the code face of the cyber digital world, so to speak, where you're extracting these extraordinarily large prime numbers using the network, harness the network in a way that's the biggest distributed computer project in the history of the world, and you're extracting these huge prime numbers the way you'd extract a gold nugget, and then that's distributed to the network, which is then the economy. So that has intrinsic value. These numbers have intrinsic value.
Yes, and one of the things that any payment network has to have is a data center. Right? Visa has one, American Express has one, but with a completely distributed peer-to-peer currency, where do you put the data center? And that's where the mining comes into play, right? Any individual can contribute their computing power to being part of the data center. And they are rewarded with the newly issued Bitcoins. And it's a lottery system, so the more people that are doing it, right, the less likely that you are to win, and people pool together. So it uses a proof of work algorithm. And there's one common thing that if the majority of the network agrees on one version of history, then that's the one that everybody builds upon and follows. So in order to potentially attack the network, and you have one version of history and you convince everybody else to have a different version of history, you basically have to take control of a majority of the network for a sustained period of time. Today, as the network gets larger and larger, that becomes almost impossible. You're not going to get 50 to 60% of the network for a sustained period of time today without investing billions of dollars. And not only just throwing money at the problem, but you have to actually get your hands on the hardware. Which is limited.
There was a period in the beginning of Bitcoin, I guess Satoshi, whoever Satoshi is, they were talking about Occupy Wall Street at the time. And the idea is, well, we don't really want to get too high profile at the moment because the network maybe is networked to what's called a 51% attack.
Yep.
But that was now 2 years ago.
Yeah.
And the network has grown in size so that it's almost inconceivable to imagine a 51% attack. Mm-hmm. It's such an outlying risk. It would be similar to saying, well, there's a risk that somebody might be able to synthesize gold out of garbage at a very, very low cost.
Sure.
That's possible.
And even if you were to take over the network, people would see it coming. They would immediately start selling their Bitcoin. So if you are in control of the network and suddenly you have a couple million Bitcoins that you manage to steal and fool everybody, they're going to be worth a lot less than you thought because the market will reprice that risk now to the network.
Right,
they'll
so
probably
it's
price
like,
it down.
like the bond bubble right now. There's a huge number of bonds out there outstanding from sovereign wealth funds, sovereign governments. They don't sell these bonds because they know they would trigger a prisoner's dilemma. They would all start selling simultaneously.
Right.
Or the Fed can't unwind its bond position because the market would see those sales coming and the bond market would crash. Just like they're front running it on the way up, they would front run it on the way down. So they're really in a box.
You can't flip a switch and take 51% of the network, right? You would have to build it over time.
Without crashing the value of the network.
Right. Yeah,
So
you'd have to build it over time. People would see it coming, and the market would probably adjust. Other people that had hardware in reserve would turn it on to try to thwart an attacker that was starting to gain control of the network.
All right, Tony Gillespie, thanks so much for being on the Keiser Report.
Yeah, thank you, Max.
All right, that's fantastic. And I suppose people could say that it's not so much that Bitcoin is digital gold, it's more like gold is analog Bitcoin. Anyway, that's going to do it for this edition of the Keiser Report with me, Max Keiser, and Stacy Herbert. I want to thank my guest, Tony Gillespie of BitPay.com. If you'd like to send me an email, please do so at keiserreport@rttv.ru. Until next time, Max Keiser saying bye, y'all.
Of this. So explain what is wrong with the market-making function here.
The way trades are processed, the buyers and the sellers at Mt.Gox and all these other exchanges, it's not done in a way that's commensurate, let's say, with the way trades are cleared at an exchange like the New York Stock Exchange or some other exchange, where there is a specialist function who is making a market, and their job is to create a fair and orderly price matching buys and sells. And so they do this by having both the ability to match trades, buyers and sellers, but also managing it elsewhere to see if we can't bring in world-class market making. And of course, my patent on this, the virtual specialist, the designs of that patent, which go back to the 1990s, there's been a lot of improved ideas that have come along since then that I'm hoping to bring to the party.
What would Mt.Gox look like with a proper market-making function if it were actually matching buyers and sellers? Right now they're hands-off. It just comes as the orders come in. It clears those orders, even if it's 0.0001 Bitcoin. It goes into the same queue as somebody trying to place an order.
Inventory of whatever it is they're trading in. So if it's IBM stock on the floor of the New York Stock Exchange, the market maker would have an inventory of IBM stock so that if in fact there was a mismatch of buyers and sellers, they can step in and be the market maker. That doesn't exist on any of these exchanges, really. They're trying to match up buyers and sellers in a way that's completely inappropriate for any kind of modern market making mechanism. And so I'm in the process now of trying to straighten that out by consulting with projects here in London and elsewhere.
Where you could exchange Magic the Gathering cards for cash. And it ended up, not by design, obviously, but it became the place to go to trade Bitcoins as well. But William Bonsai has created a backstage look at what the Mt.Gox command node looks like. As you see, it looks very 1950s. Now, Max, you created the Hollywood Stock Exchange, where it's run by the virtual specialist technology, which you invented. And a few days before Mt.Gox crashed, you warned exactly.
Hi, I'm Max Keiser. Welcome to the Keiser Report. Many people want to know what's going on at Mt.Gox, the Bitcoin exchange. I'll tell you what's wrong with Mt.Gox. Market making. We're going to talk about that right now. Stacy Herbert.
Max
Yes,
Keiser.
yes.
For those out there who don't know, of course, Bitcoin is this new currency. It's a network protocol, an online exchange, a way to transfer value online. And 80% of Bitcoins are traded on Mt.Gox. Now, Mt.Gox stands for Magic the Gathering Online Exchange. It started life as a place